Hi everyone, I am Punya Garwal, ACC affiliate and one of the admins of Being ACCA, and in this video I will be discussing a very frequently asked topic and a very common topic which is there in ACCA syllabus as a whole, which is users of financial statements. This topic can be found in papers like F3, F1, F7, some portions of F8 as well, not really, but very commonly asked in these three papers. So, users of financial statements, I hope most of you know what financial statements are. So, let's move forward with discussion of why is financial information prepared. So, why do we prepare financial information? So, as you would know, financial statements are bifurcated into various aspects like this balance sheet, there's statement of profit and loss, there can be SOI, which is statement of comprehensive income, and many others. Now, why do we prepare this financial information? Like, why do businesses or firms or like big companies prepare these types of financial statement, and what is the purpose of the financial statements? So, the financial statements are prepared and produced for several reasons. One is your financial statements serve as a key one. The major reason is for the communication. You communicate your highs and lows with the shareholders who have shares in your company or who are related parties. So we will discuss those 8 related parties in this video. And you tell about your financial health and how is the company performing, what is the aim of the company, so that you get more investors in your company, and of course you get more funds to make future investments. So that is the major reason why you actually make financial information, and also to tell the government and the authorities that you're not making any type of frauds and your company is a legitimate company. So these are some of the reasons that you make why you make financial information. Now, who are the users and why do we communicate to them? So users are crucial because they will be making an informed decision. So if I know about a company that yes, this company is in a profit figure, of course I will be making, I'll be going ahead with making my investments at that company. But if I know that no, okay, this company is not doing so great and it's not, up to the mark, of course I won't be making any types of investment in that companies. So that how do we know that the company is making profits or incurring losses or incurring frauds, errors, whatever, is by the financial statements that they release for the general public. So if you go on to Google and you type, for example, Reliance financial statement or any listed company's financial statements, you will be able to see all of their balance sheets, their financial positions on Google. You can just write down on Google this thing, or any company, or Tata, you can write Tata or any company, and you'll be able to get their financial statements, current financial statements, previous year's financial statements, and then you can actually see, okay, these were the profits, these were the expenses that they were doing, this is the revenue that they logged for that year, that was the turnover of the company. So all of these things can be easily seen on Google, on internet, because these are publicly available since these are listed companies. So if your company is a listed company, only then your financial statements will be available for the public, for sure, for obvious reasons, right? If it is not listed, it won't be available publicly, but of course it will be available to the directors, to the shareholders, to the partners, whoever are the immediate users of the financial statement, right? So now again, talking about the informed decision which will be made by the shareholders, right? Assessing the performance, again, shareholders, your managers, the owners actually of the company, maintaining compliance, can be government, can be authorities, can be tax authorities, communicating with other stakeholders. So stakeholders can be consumers, suppliers, all of these. So we will be discussing all of these suppliers, all of these users in detail in this video. Let's move ahead. Financial statements serve as key means of providing the information to a wide range of users. As I just discussed, that wide range of users we use, and in this video we'll be discussing 8 users of the financial statements. For them, these financial statements of a particular company are very, very important due to particular reasons of their own. So let's start and let's discuss the first to users, which are managers or the management of the company, and the shareholders, who are the real owners, or the investors, who are the real owners of a company. So why do you think that managers need the financial statement? So that they're able to see if the business is running efficiently and effectively, and to also make decisions. The top level management also make decisions in accordance with the financial statement, that yes, we went wrong here, or we made a good decision here, so let's continue this and abandon this. Like for example, if in your statements you made a certain investment of $1,000 million, right? But that investment did not turn out to be fruitful, since you were not able to make any kind of revenue because of this amount. So of course, you will be disposing of this amount and rather making your investment somewhere else. So how are you going to know about this? Is by the financial statements, right? So that is the reason that managers, or the management in general, the managers need your financial statement, so that they can see if the business is running efficiently and effectively. Now, shareholders, who are the real owners of the company, have to see, because their main agenda is maximization of their wealth, right? So they will be focusing more on the profitability. If the company is making profits, they're solely responsible, or they're solely concerned, if I say so, about the profitability of the company, because they want their shares, they want the maximum return of the investment that they have made, right? For example, if you invest in any company, even if you take like smaller shares, you do not think about if the company is working efficiently, if the company is working efficiently, effectively, or on those lines. No, right? You're only concerned, okay, I have invested 100 rupees, is did it turn out to 200, or did it fall down to 50? You're only concerned about the profit, right? When you go onto the share markets, even if you take IPOs, you're only concerned with the numerical figures. You're only concerned about the profits. You're not concerned about the effectiveness and the efficiency, because that is the job of the managers, and that is not the job of the shareholders. They're only concerned about the profitability. So that is the reason that they need the financial statements to see how much are they earning the profit, and how much um if the company is incurring losses, how much are the losses. So that is the reason that the shareholders also need the financial statements. Now, talking about the next two, which can be a connected parties, if I say so, is your suppliers, from whom you take the material, and the customers whom you sell the material, and the providers of the finance, who you take the finance from, loans, whom you take loans from. So let's discuss firstly about the suppliers. Why do you think that the suppliers will be considered, will they'll be interested actually in the financial statements? Because they're concerned about that they have provided you goods, right? I'm sorry for the drawing, but they have provided you the goods. Now, in return, they expect the amount, the money, right? And they will see your financial statements. Why? Because they're concerned that if that whether the company will be able to provide the debts or not, will be able to pay for the supplies or not. So want to know about the company's ability to pay its debt. Because of course, when a company, if you are from a business background, or in general also, if you know something about the commerce field, you know that the businesses, how do businesses work? They take loans, not exactly loans, but they take on credit terms, right? If for example, I took goods from a supplier for rupees 100, I won't be paying 100 rupees at the first instance. Maybe I'll pay an advance of rupees 20 now, and I'll pay 20 later, and then the rest 60 I'll be paying on credit after 2 months, after 3 months, whatever the supplier terms are, right? So the supplier would be concerned about this 60 rupees, that whether the company will be able to pay them 60 rupees or not. And this they can see via the company's financial statements, so that how, what is the credibility or credit position of the company, and will they be really be able to pay their debts or credits or not, right? Now, the customers, why are they interested in the financial position, financial statements? Because they will be seeing that whether this company will be, for example, a customer made a huge order to a company of, for example, $1,000 million. Okay, now the customer has made an advance payment as well, 50%, for example, the advance payment was. Now the customer will be seeing the financial position of that company on a regular basis. Why? Because he or she will be concerned whether the company will be able to supply them goods or not, or whether the company will be shutting down or having any type of going concern issues. So this is the reason that the customers will be looking forward for the financial statement, simply because they want their supplies to be made. So customer need to know it can always supply and not close down, right? Now, the next user of the financial statement would be your bank, your finance providers, the people who provide you loans. Because come on, of course the company won't be actually only running on the money of the shareholders. They have to take loans for big manufacturing processes or even bigger investments, right? So the finance providers, they will be saying it for two reasons. One, if the company will be able to pay you the interest, because of course if the bank is giving you a loan, they will charge an interest. And secondly, if you will be able to repay the loan or not. Again, the same going concern issues. They are concerned about the going concern thing. So two things they'll be seeing: interest and the repayment. So this is again, they will be able to see via your financial statements. Let's move forward with next. Okay. Then we have tax authorities. Of course, why do tax authorities look at your financial statements? So that they see that you are not incurring any types of fraud, and you're paying the taxes on timely basis and on the correct amount. So taxes have to be paid on timely basis, and the amount has to be correct as well, right? So amount has to be correct. So they'll be seeing two things: timely basis and amount is correct, and not fraud in terms of like there can be manipulations in terms of the profit. The company might show that the profit is less, so that they have to pay the tax as less. So they will be seeing the financial position, and they will be scrutinizing if the profit is legitimate and the taxes are legitimately paid to the government. So that is the tax authorities. And lastly, the employees, of course. Employees are always, concerned. See, employees are very self conscious. They're always thinking about themselves, right? They have to see that will the company will be able to pay their wages, will the company will be able to pay the salaries, any bonuses, what will be their career growth in the company, future careers and the size, right? So that is the reason the employees are always looking out there for the company's financial position, because they know that if the profits are increasing of a company, there might be a possibility that they will be getting bonuses, right? Or there may be an increase in their wages and salaries. So maybe they'll get more work, due to which they can again increase their wages and salaries. They are concerned with the financial position solely about because of their salaries and their wages. I hope. Then we have the last two users of the financial statements, which is your financial analyst or the advisors, who usually give you financial advices, usually interested in the financial statement of the public companies, and not, of course, they're not interested for the sole traders companies, but a public company, because that is when a public company is a bigger company than a sole trader, right? And sole trader will be making their own decisions and not really relying upon the financial analysts or the advisors. But a public company, because it is going public and there's a huge amount of shareholders and shareholders wealth involved in that company, they will be seeking financial help or financial advices from a financial analyst. So that is the reason they're also looking out for public listed, basically listed companies, who so that they can provide their advices to, and of course earn money. And of course government for national statistics, also for your taxation, but that is also associated with your tax authorities and your rules and regulations that the company is following, all the rules and regulations. And also for the statistics, for example, that Tata clocked this much of turnover, making this much of profit for the year. That will again add to your country wealth, right? Country wealth would be added to, large companies contribute a lot of amount to the country's wealth. So that is the reason we needed for statistics, national statistics. With this much, this year, this much of total gross net profit. If you know GNP, GDP, these are all economics terms, but I hope that you know them. Gross domestic product, gross national product. So these are very important for the governments, and that is the reason that they need the financial statements for the statistics aspect of them, right? So I hope that this was helpful for you. This video was helpful for you. I tried and explained all of the uses of the financial statements, and also why each of them require the financial statement, and why do we need in general the financial statements to be prepared by the company. So if you have any more doubts in this topic, you are free to DM us on our Instagram page, which is being ACCA. You can also comment down below, and I'll see you in the next video. Thank you for watching.